In this video, I'm going to review the latest decision from the European Central Bank. We're going to see what they decided and what implication that has for the markets. Taking a look at the latest ECB meeting, we see that the major shift and change that's taken place is found in the sentence here. Remember, with these central bank decisions, all the central banks have websites and you can read the central bank statements for yourself. This is the one by the ECB just released, and you can just go along to the ECB website and pick them up. They have a whole list of historical ones as well. So what the ECB have done is they've kept interest rates the same. They've kept the total envelope of bond purchases under their PEP program the same. But it's this sentence which shows the difference. They are expecting to conduct the purchase of the PEP bonds to be conducted at a significantly higher pace than during the first months of the year. So essentially, they've said they're going to purchase these at lower than 100 billion euros per month, but higher than the 60 billion euros seen in February. So somewhere between that 100 billion and 60 billion bracket. That's roughly what they're going for. And a sources piece after the ECB decision and press conference said that there were different opinions within the board about whether the recent rise in bond yields needs to be unwound. Remember, this big picture that we're seeing in bond yields moving higher is all to do with a different perspective being taken by different market participants. Is the rise higher in bond yields? You can see just major markets seeing bond yields rising higher. Is this because there is an economic recovery underway? So bond yields are rising in expectations of higher interest rates, or is the surge higher in bond yields itself a cause for concern? And this is the German 10-year bond, and this is used as a proxy for the Eurozone because Europe don't have a bond of their own, but with Germany being the largest member country of Europe, it's often traded as a proxy for the Eurozone, for the Eurozone as a whole. And you can see that the bond yield has just been pressured, and out of yesterday's meeting, we see the bond yield dropping. Now, there is a mild selling pressure that has entered the euro today. Now, an ING research piece said even if the bond purchases were doubled to 100 billion euros per month, that in and of itself, that one-off doubling of the bond purchase would hardly impact the value of the bond. But if they were boosted, according to ING, to 100 billion euros per month and kept like that until the end of September, it's expected to have a 20 basis point impact. So broadly, the ECB decision is just bringing a little gentle selling pressure into the euro, but it's sort of a gentle, more subtle pressure. Inflation was upgraded to 1.5% from 1% for this year, but longer term inflation was kept at 1.4% for 2023. So in other words, the ECB are expecting a short-term spike higher in inflation, so that's not necessarily a problem that the ECB are seeing further down the line. Whether that turns out to be the case or not, we're not sure. But in terms of what this actually means, it's mild euro selling pressure, and we expect a currency pair like the EURCAD to find sellers on rallies higher. And any retracement back up to that 1.5200 level, we can expect to find sellers. You can see that broken trend line and expect to find selling pressure. Now, the CAD is a little bit stronger because the Bank of Canada met this week and they were more cautiously optimistic. So there was a slight divergence between the ECB on one hand and the Bank of Canada on the other, and any retracements higher to that 1.5200 level should find sellers. Obviously, the main risk to this outlook would be if there was some optimistic news for the Eurozone, and say the Eurozone recovers sufficiently that bond purchases are not increased or accelerated but tapered. That would mitigate this difference between the EURCAD. But as things stands, a EURCAD selling bias, as long as the conditions remain slightly different between the two central banks. So gentle selling pressure could also would favour Euro US dollar downside as well. Because of the gap opening up between the US and the ECB. But don't forget, we have the Federal Reserve meeting next Wednesday, so we would expect to see fresh strength or weakness coming into the dollar after the Federal Reserve meeting on Wednesday week. So that's one for your diaries coming up on Wednesday. If you like this video, please give it a thumbs up, like and share it. It's very helpful for me to know both what's helpful and also the more you like and share videos, the more time I can commit to making sure I get the great and the right content that people want. Secondly, you can follow me on Twitter at Giles Cochran CCCA, that's my Twitter handle, and you can also link up with me on LinkedIn as well as sending me a direct email here at giles.cochran@hycm.com. Don't forget my HYCM blog. I put lots of really good information up on that blog. Just link up with me there. And you can also contact me direct for some great programs I've set up to help traders take their trading to the next level. I'm passionate helping traders to get there, to break through that profitability barrier. And they are skills. Trading is just a skill that can be learned like any profession. And I put a lot of time and effort to try to put the right tools in place for traders. So contact me there, as well as, don't forget, live market analysis. Each week, you can register for that on the website. Go to the blog there. You can register for the live market analysis week ahead webinar I do, as well as a workshop I do for HYCM clients on Wednesday. It would be great to link up with you. I'll just quickly show you the Twitter post. So this is my Twitter page. Here's my Twitter handle. You can link up with me here with LinkedIn, and also you can also access the trading programs here. There may be a link underneath. If there isn't a trading link underneath this video, please do contact me and I can send you a link personally. But this just shows you the tools I've set up for people to make a deposit to HYCM. So there's no cost to you for these programs aside from making a deposit. So they really are excellent value and really do give people an excellent opportunity to take their trading to the next level.